Good morning, trading world. It is January 5th, 2023, and this is my pre-market outlook and technical analysis for day trading the markets. It is 7:40 a.m. on the East Coast. Let's get to the pre-market outlook. The title for today's outlook is Resistance Testing 1, 2, 3. Before I get to that, there are so many cover-ups in the market right now. I like listening to CNBC, Fox, and all these other networks, but not the way that you think. When you listen to the news, you have to consider the source because there's usually a narrative they want to push on you. The crazy part about the news outlets is that they will give you some facts and twist it to push their narrative. If you've never heard this saying, it is oh so true. There is some truth to every lie. So, you have to listen between the lines to separate the false narrative from the real news. I say all of this because there's a lot of news about layoffs by the tens of thousands. However, our most recent jobs report have been better than expected. The latest is Amazon to cut 18,000 jobs, but the spin on it is they hired too quickly during the pandemic. Amazon isn't the only one where this is happening. There are a lot of companies laying off at this rate. So how long before this shows up in the employment situation reports? In my opinion, we are already deep into stagflation, a period of slow growth and high unemployment rate accompanied by inflation. A big part of this is hidden by the seasonal rise in jobs and spending during the holidays. So watch out when all this seasonal mess clears up. We could be already in a world of trouble. Now, I know you hear testing 1, 2, 3, and you think of mic check. But instead of a mic check, we're doing a resistance check. So resistance check 1, 2, 3. We have major resistance level at the 386 to 387 area. Persistence beats resistance most of the time. We have tested this area twice now. Will the third time be a charm? I think it's possible we get one more pullback and then a running start to break through this resistance at 386, 387. This is all going to make an interesting Friday morning when the 8:15 a.m. ADP employment report and 8:30 a.m. jobless claims report take place. Position-wise, I am still holding on to bull put spreads I came into the new year with and doing intraday shorts every day. Looking for today or Friday pre-market to give me a place to go long some calls. Let me bring up the key levels for today. All right, here we are back with the key levels for the day, starting on the resistance side. We have our jack resistance at the 384 to the 385 area. Then we have our queen, our oh so important queen resistance at 386 to the 387 area. And if you notice this small little red trend line right here is actually a trend line that goes back a long way that kind of illuminates the channel, or the trend channel, the top of the trend channel that we're currently in. Then we have our king resistance at 389 to the 392 area. On the support side, we have our jack support at 383 to the 382 area. And if you notice, there's a highlighted area or shaded area here, which is a supply-demand zone that I highlighted, where I can probably abolish it right now, but it's a common area where trade is flipped back and forth, where normally buyers have turned to sellers and now sellers have turned to buyers. Below that, we have our queen support area, 381 to the 380 area, which is very, very important. We may get that revisit overnight to this level. And then we have our king support level, 379 to the 377 area. Today and overnight is going to be key to see which one of these support levels we hold on the pullback. The main thesis for today, it is small, but it is bearish bias. Closing below the 383.76 with a projected target low of between 383 and 377. The alternate thesis is bullish, closing above the 383.76 with a projected target high of between 384 and 392. The main channel we are in is 379 up to 397. The main channel below is 379 down to 364. Market strength and breadth started high and stayed in a decent to high range throughout the day yesterday. We are at a point where we want to push through resistance, but we also are at a point where we need to another pullback to gather strength to go higher. And it's complicated right now because we've pulled back several times, and it's not your average, just consolidate down, but we've actually dropped away from this level, in essence giving us a running start. So it's hard to say whether today is the day or we'll wait for tomorrow. But I have some money saying that we have one more chance to pull back and then get another running start. Where was I? We do have somewhat of a harmony between the technical side, which is bearish, and the quant side, which has a very small bearish bias to it. So usually I would take comfort in the fact that we have harmony in both of those, but since the quant side is ever so small, it's within a couple pennies, it's kind of hard for me to take solace and place a lot of positioning around that. So treading lightly. This brings us to the scenarios of the day. Give me just a moment while I bring those up. All right, here we are with our first and most probable scenario of the day. It is our rounded reversal day type structure. We could get a continued push higher, toward the Jack or Queen resistance area and find midday chop around either the possible Queen or King resistance area before going back down with the same energy or force we went up with the first part of the day. I do want to make you aware of our vice versa alert, which could be pretty high on this today. And the vice versa alert just says the opposite. We could get a continued push lower through the cash open, and then find our midday chop around either the possible Queen or King support area, and then find our way back up the second half of the day with the same amount of force or energy that we came down with the first part of the day. That is our rounded reversal day type structure. All right, and our next scenario is going to be our expanded range day structure. We can have an initial pop and drop before testing support and possibly pushing through. That pop could wind us up around the 386, 387 area that I talked about earlier. And support is that 382, 381 area that we could end up pushing through today, overnight, or pre-market Friday. All right, our last scenario is our trend day down day type structure. We could open gap down and start with a rally back toward the previous close, represented by the blue line. We find should be resistance at that previous close and begin the downtrend of the day. And that's known as our golden window, the best time of day to trade. We usually find our midday chop around the possible Queen or King support level. And not always, but usually we start off the second part of the day looking to continue the primary trend of the morning, but it usually winds up being a head fake and we get some kind of retrace or rally into the close. So that is our trend day down structure, and let me correct that. All right, these are the scenarios that I will be looking at today, and I hope this helps. Remember, the most important job as a trader, or your most important job as a trader, is to protect the capital that you already have. And we do this by knowing and understanding the risk that we have on in each position. And then we manage that risk in accordance to our account size. It is more important than ever to understand risk. Risk over direction. Because we're in a volatile market that is going to swing wildly because of the great unwind, the cost of carry. So please be careful. Wishing you a positive trading day. Let's go out and make it a great one.